Welcome back to my YouTube channel. So we'll continue with the revision of the mock paper for August 2024. And if you are in this channel for the first time, please take a second and subscribe to this channel. Also give a like to this video so that it can reach as many people as possible. So I'll go straight away to the question. That was question 25. Your audit client, Maligumu Limited, is yet to finalize the financial statements for the year ended 30th June 2024. The company recruited a new accountant who has been with the company for just 2 months. To avoid delaying the audit, the accountant has provided the following list of balances with additional information. So we have the list of balances here. Then additional information, number one, inventory as at 30th June 2024 was valued at shilling 16,250,000. Number two, included in the purchases is the purchase of equipment and office computer worth shillings 120 million. Number three, depreciation is to be provided on cost as follows. We have equipment and office computer. We have motor vehicle at 10% and 15% respectively. Number four, allowance for doubtful debts is to be increased to shillings 800,000. And number five, the following expenses were outstanding as at 30th June 2024. Then we have stationery at 190,000, rent at 300,000, rates at 200,000. Number six, the following expenses were prepaid as at 30th June 2024. We have sales promotion expenses, 80,000, insurance, 180,000. So required, prepare an audit working schedule having 4 sections for draft trial balance, adjustments, profit or loss items, and statement of financial position items. Each section should have the debit and credit columns, therefore 8 columns. So I'll do it here. Yes, I'll do it here. So it is Maligumu Limited. Audit schedule. For the year ended 30th June 2024. Okay, so this is what we are going to do. So we start with the draft trial balance. So we'll have the debit. Debit at the credit side. Then the next item will be the adjustments. So for adjustment also we'll have the debit and the credit. Then we'll have the profit or loss items. So we'll also have debit and credit side. Then finally, We'll have the profit, the statement of financial position items. Yeah, so we'll also have the debit and the credit items. Okay, then the shillings were in thousands. So just drag. Sorry, why is it not copying? So allow me to bold this and also to bold this, the debit and the credit side, and also bold the items here. Okay, so I'll increase the size of this a little bit. I'll also increase the size of this, also that. Yeah, then I'll merge that and center so that it looks presentable. Merge that and center. Also merge that and center. Yeah. Maybe also bold it. And also bold that, yeah. Yeah, so now we can start. So the draft trial balance, for the trial balance, you know that assets and expenses are always debited, while incomes, equity, and liabilities are always credited. So that's what will guide us as we prepare the draft trial balance with this available information here. So we'll start. So I'll start with the land. So the first, just say equals, then you copy land. Land is an asset, so we'll debit it. Then we have sales. Yeah, sales is revenue, that's income, so we'll credit it. Then purchases. We debit it. Then carried inwards, yeah, that's from part of purchases, so we'll also debit it. We'll also debit it completely. Then drawings, we debit. Then rent expenses, that's an expense, so we'll also debit it. Rate is an expense, you debit. Insurance, an expense, you debit it. Postage and internet is an expense, you debit it. After postage, we go to stationery, an expense, you debit it. Sales promotion expense, you debit. Salaries and wages, you debit. Bad debts is an expense, you debit. Then allowance for doubtful debts, you debit also. Then accounts receivable, that's an asset, you debit. Then accounts payable is a liability. So liability, you credit. Cash in hand, an asset, you debit. Cash at bank, also an asset, you debit. Inventory, you debit, is an asset. Then motor vehicle at cost, that's an asset, you debit. Accumulated depreciation is a liability, so you credit it. Then capital is a liability, is an equity. Yeah, those are equity, so you credit equity for 68,300. Okay, so I think up to that point, now we'll be able to check whether the debit and the credit side balances. So before I do that, I'll create some space. Yeah, let me create some space here for the adjustments. Huh? Yeah, so I'll do my summation here. Yeah, I'll do my summations here. So I just say equals to. Yeah, it has to balance. Yeah, the total balance must always balance as per its name. So let us see if it will balance up to that point. 1548, 540, then I'll drag. Yeah, so it is balancing at 1548, 540, 1548, 540. Yeah. So I'll now go to the adjustments, and adjustments are found under the additional information. Yeah, so the first adjustment that's saying number one, inventory as of 30th June 2024 was valued at shilling 16,250. So inventory, that's the closing inventory. So the closing inventory, yeah, it's not an adjustment, but we'll place it under, so that I don't forget, we'll place it under the items for profit or loss item, the closing inventory, we credit it. So let me just credit straight away under the profit or loss item. Yeah, so I'll credit it with 16 to 16,250. And I'll also debit it because that's the closing inventory. I'll debit it under the items of statement of financial position so that I don't forget about it. Huh? Yeah, so I've credit and debited at the same time. That's how you treat the closing inventory. It's both an item of profit or loss and statement of financial position. So I'll go to number 2. They say that including the purchases in the purchase of equipment, included in the purchases is the purchase of equipment and office computer worth shillings 120,000. So I'll create a new account and do the adjustment. So the account is equipment and office computers. Yeah, so there was amount which was 120. So I'll debit that 120 on this account, but under adjustments, Yeah, so I'll adjust here the debit side with 120,000. Then it was included in the purchases. Yeah, purchases we only include goods. So I'll reduce. So I'll credit. It's a double entry. So because I've debited equipment and office account, so I'll credit the purchases account. So you go where the purchases is. So under adjustment, I'll credit it with 120,000. So I just say equals, then I select that. Yeah, that way. And we continue. Number 3, additional information number 3, depreciation is to be provided on cost as follows. So there was a depreciation for equipment. Let me do the calculations here. Yeah, so that's the depreciation for the year. So it was 10% times the cost, which was the cost of equipment was 120,000. Yeah, it was 120,000. So let me just use this value here, 20,000. So it was 12,000. Let me do the same for motor vehicle, which was also at cost. Motor vehicle at cost was 280. Yeah, so that's okay. Yeah, so with these items, with this depreciation, so I'll introduce the depreciation of equipment and office computer for the year. Yeah, so I'll say depreciation of equipment and office computer. Yeah, let me increase this. Yeah, so the depreciation for the year, this is depreciation for the year. So that's an expense. So we'll debit it under the adjustments. Yeah, so you come to adjustment here and I'll debit it. Yeah, it was 12,000. So I just select it, 12,000. Then I'll credit the accumulated depreciation under equipment and computers. Yeah, so accumulated depreciation. I'll credit that. Credit that. So I'll credit the 12,000. Yeah, because it's a double entry. Yeah, then we add the depreciation for the year for the motor vehicle. So let me say depreciation for motor vehicle. Yeah, so that's an expense. So I'll debit it 42,000, but credit the accumulated depreciation account, which motor vehicle already have. Yeah, so I'll do a double entry there. So under adjustment, I'll credit that with 42,000 to do the double entry. Then we continue. We go to the other additional information. We have adjusted that. We are told that allowance for doubtful debts is to be increased to shillings 800,000, to be increased to. So we check how much was allowance for doubtful debts as per the trial balance. So allowance for doubtful debts was 720,000. So it is being increased to 800. So the difference between 800 and 720 is 80. So we'll debit 80 under adjustment. I'll debit 80. Then we credit the accounts receivable. We credit the accounts receivable. So accounts receivable, it's here. So we'll debit it with the same amount because they're double entry with 80. Then we continue. Additional information number 5. They're saying that the following expenses were outstanding as of 30th June. So those were accruals. Yeah, so we'll introduce an accruals account. Yeah, they're outstanding. So those are accruals. So we'll sum 190 plus 300 plus 200 and we'll get 690. So from that 690, 690 accruals is a liability. Yeah, so we'll credit it under adjustments. Under adjustments. So I'll put it here to 690. Yeah, I've summed that 690. So I'll debit that 690. Sorry, I'll credit 690 and adjustment, but debit each item. Huh? Yeah, so I'll start with stationery. So I'll debit the stationery account with 190. Yeah, so I'll stationery, I'll debit it under adjustment. Yeah, I think it's there with 190,000. Now individually, then the other item will be rent. Rent also, I'll with 300,000. I'll debit rent account with 300,000. Yeah, the rent expense. I'll debit the rent expense with 300. Then rates with 200. Yeah, I'll also debit rates with 200. Rates, debit 200. Yeah, that's how you do the double entry. So the 690 is the total, the accruals account. Then you debit single account, yeah, with each amount 190, 300, and 200. Additional information number 6, and which is the last one. They're saying the following expenses were prepaid as of 30th June 2024. So there was prepayment. Yeah, so just come and say prepayment. So prepayment is an asset, it's a current asset. So we'll debit it under adjustment. Yeah, so we'll add 180 plus 80, that will give us 260,000. So I'll include the 260,000. So the 260, yeah, I'll debit 260 under adjustment, but credit each account because it was a prepayment. So I'll credit sales promotion expenses with 80. Sales promotion. Yeah, I'll credit it with 80. Yeah, because there was a prepayment. Then insurance, I'll also credit insurance by how much? By 180. Yeah, so that 180 plus 80 is 260. Yeah, I think those were the only adjustments. Yeah, so from there now, let us see if we'll be able to balance the adjustments. Yeah, so you just come here and you just drag. Yeah, so it will give us 175,030. It will give us 175,030. So the adjustments as balanced. Yeah, so we'll go now to the profit or loss items, and here you just choose the values. If an items appear under the profit or loss items, then you identify it and do the adjustment if there's any. If there is any. So I'll start with the land. No, land is not an item of profit or loss items. I'll go to sales. Yeah, sales is an item of profit or loss. Purchases, yes, purchases is an item of profit or loss. So I'll come to the debit side because we're supposed to debit it. So I'll pick this and subtract 120 because 120 is on the credit side. So it means that it reduces that value. It reduces that value. Carriage inwards, yeah, that's an item of profit or loss items. Drawings, no. Rent expense, yeah, rent expense is an item of profit or loss. So I'll take 15 and I'll add to 300 because they all appear on the debit side. Yeah, so I'll add that. Then rates, say equals to, rates, I'll also pick this. Then I add because it's also on the debit. So we'll have that rate. So insurance, Also on the debit side, I'll pick 800, but subtract the 180, which was the prepayment. I'll get 620. Postage, yeah, an item. Stationery is an item of profit or loss because these are expenses. So you take 12, 10, you add to 190. Yeah, there was an outstanding of 190. Then sales promotion expense. Yeah, there's an expense. I'll pick 400. Then I reduce by the prepayment of 80. So I'll get 320. Then salaries and wages, you debit. It's an expense. Bad debts, yeah, you pick it. There was no adjustment. Allowance for doubtful debts, yeah, you pick it, but you adjust. We have debit, but there was additional of 80, which makes it 800. Yeah, 800. Then we have accounts receivable, no. Accounts payable, no. Cash in hand, no. Inventory on 1st July. Yes, inventory, that's opening inventory. So that's an item of profit or loss. Yeah, that's the opening inventory. Then we have motor vehicle at cost, no. Accumulated depreciation, no. Capital, no. Closing inventory, yeah, already we have it here. Yeah, you have already placed it here. Yeah, so that's already captured. Equipment and office, no. Depreciation of equipment, yeah, depreciation for the year is an item of profit or loss. Yeah, because this is the depreciation for the year. It's an expense and an operating expense. So we'll pick it and debit it there. Then accumulated depreciation, no. Depreciation of the motor vehicle for the year, yes, it's an item of profit or loss. Then accruals, no. No. Then prepayments also, no. So we are done with that. So what we'll do, we will we'll sum all this. So I'll start with the credit side. Always at the profit or loss items, start with the credit side, because now here we are supposed to find what we call the profit or loss for the year. So I'll write profit in bracket loss for the year. Yeah, so it is going to be the difference between what we get here and the values on the debit side. Yeah, that will give us the profit or loss for the year. So I will sum this side on the credit side. So I'll sum this. Yeah, always sum the credit side first under profit or loss items. So we'll have 976, 250. Yeah, so that value should balance, will be the same as the value on the debit side. So you just copy it so that you come here at the profit or loss item, you pick this value, then you subtract the sum of all these values here. Yeah, under the debit side. So you just sum all this up to there. Then you close the bracket. Yeah, so the profit will be 246, 210. Yeah, so it's positive. If it was negative, then it will be a loss. Yeah, so the profit will be 246. Let me highlight that. 246, 210 for the year. Yeah, so and with that, we are done with that, the profit or loss item. So we'll go now to the statement of financial position items. Yeah, so we'll do this. So we'll start with the land the same way we did. So land, yeah, it's an asset, so it falls under. Yeah, so there was no adjustment to land. Sales, no. Purchases, no. Carriage inwards, no. Drawings, yes, we'll debit drawings. So drawings will debit that 35. Rent expenses, no. Rates, no. Insurance, postage, no. Salaries all the way up to Yeah, account receivable. Yeah, now they will debit because it's an asset. Yeah, so you just come to accounts receivable, then you take that 12,800. Yeah, but there was an additional allowable allowance for doubtful debt. So you subtract, huh? Yeah, because it will reduce the accounts receivable. So you subtract it to get that value. That is 12,720. Then you go to accounts payable. There was no adjustment, so you credit it because it's a liability. It's a current liability. Yeah, so after that, you go to cash in hand. Cash in hand was 140. Then we have cash at bank, which you also debit 25 that way. Then we have inventory. That was opening inventory, no. Then motor vehicles at cost. Yeah, you'll have it on the debit side. Yeah, then we have accumulated depreciation, which is a liability. So we'll put it on the credit side. So you pick that, then you adjust. Yeah, there was additional for the year, 42,000. So you pick that and you put it there. So, then we have capital. Yeah, you also credit capital for 68,300. There was no adjustment to capital. Closing inventory. Yeah, already you have captured it on the debit side. Then equipment and office computer, you debit. Yeah, that's an asset account. Then depreciation, we say no, but accumulated depreciation, you will credit. Credit that accumulated depreciation there. Then depreciation for motor vehicle, no. Then accruals, you credit. Credit the accruals, 690. Then prepayment, you debit. There was no adjustment to that prepayment, so you debit. You get 260. Yeah, then we have profit for the year because there was no return profit brought down. Then now we'll credit now the profit for the year will be the return profit. Yeah, so we'll just credit it straight away. So you pick that and you credit. So let us see. This is supposed to balance. So let us see if it will be able to balance. I don't why is it not balancing? Yeah, let me see this. Why is it not balancing? I think maybe it's just it should balance. Huh? Let me just sum it manually. I don't know why it's not giving me the correct answer. Let me sum all this from here all the way. Should give me that. Should give me that. It should sum that. Yeah, it should balance. Yeah, so they are balancing at 89 400. Balancing at 80. Yeah, so it's balancing at 889 400. Yeah, so that's how you're supposed to do this question. That's how you are supposed to do the audit schedule. And you make sure that you underline. So let me create the top border, then I'll give the double bottom border that way. So that's how you are supposed to do this question. Yeah, that's how you're supposed to handle this question. Until next time, bye-bye.